Welcome to the Real Estate Reserve Podcast with your hosts, Jason Balin and Ian Horowitz.
What's up, Ian?
What's up? I'm supposed to be sharing away, but I'm mischiefully doing something else. All right, I'm here. Let's go.
Yeah, that's okay. Fun topic today. It's kind of a question, but before we get into this topic, let's circle back. So today is Monday, June 29th, 2020. We're still kind of in the middle of a lot of stuff going on, a lot of uncertainties going on, but the good news is real estate never really slowed down and it never really stopped. And so many of us, real estate investors, agents, other service providers in the real estate business have still been going strong. They've had to adapt. A lot of people still either work from home or kind of work in a small office. I actually did my first closing today in the Universal Title office in Ellicott City near my house. So that made it a little bit easy to shoot down there. Most of the closings I've been doing have been obviously our loan closings. I don't have to attend closings, so that's easy. But I sold a property this past Friday that we owned, and I did that all remote as the seller. We sold a few properties. And this particular one, it was just a refinance for one of our rental properties that we had with our line, and it was just easier. They needed both of myself and Chris's signature, so it was just easier to head on over there and hang out with Amin at Universal Title, who we do a good amount of stuff with, and just sign everything. So that was good. That was our first masked settlement. You roll in there, I got a backwards hat on, I got my sunglasses on, and then I got a mask on. And you can't even, obviously, I was with people that I know, but if you don't even, know who you're meeting with, it's kind of an interesting setup.
Yeah. Well, that's the hardest thing with everything going on, but you know what? It is what it is. I guess everyone's adapting to the temporary abnormal, I guess. But that's good that you got out and got to go do a closing on your own. Got to see people. I got to see you in person the other week when we were out golfing. So that was fun. It was nice to actually. Golf's been a lot easier now that we all get to ride in our own cart and don't have to shake hands, don't have to pull pins. So that's been fun.
Right. Do one of these.
Yeah.
Make it easy.
Me and Pete shook it out. But dude, so what's been going on? How's your deal flow been during all this? Is it picking back up, or has it been status quo since this whole thing started?
So our deal flow has always been strong on the lending side. Sorry, I was sharing this to a few people. Our deal flow has always been strong, kind of on the lending side. Still have seen a lot of opportunities throughout everything. But the interesting thing is, and I've kind of shared this openly with internally with our partners, and then everyone else who's either watched the show or with you. But it's kind of interesting. I have a really good pulse of what's going on in the marketplace because I talk to a lot of real estate investors all the time, and a lot of them come to us to apply for a loan or just to pick my brain to see kind of where we're at and what our terms are and what other people are doing there. So over the last few months, I've really had a really good sense of what's going on, and just based on the deal flow, just based on me talking to people, they fill out loan applications, they call me. I just have a good sense of what's going on. Are they buying flips? Are they buying rentals? What's going on in the DC area? What's going on in the Baltimore area? Obviously, we have an office in the Philadelphia market as well. So I see kind of the deal flow there. And I would sum it up like this. I would sum it up that it's hard to find really good opportunities out there on the buying side. Let's talk about fix and flips first, and then we're going to talk about, and then maybe you can jump in and talk about some rental stuff. But I would say that the numbers are tight for good fix and flip projects. Do they exist? Absolutely. Are they tight? Absolutely. I see some good ones and I see some bad ones. And the interesting thing is a lot of the bigger investors and a lot of the good investors that do a lot of projects, and I shouldn't say good investors, but the higher volume investors, that just because you do a lot of deals doesn't mean that you're good at doing deals. But the ones that are doing higher volume, I don't see the volume that they're doing anymore. They're just not doing that volume. And I think that they're passing on opportunities because the numbers are too skinny. And then you have somewhat of a newer investor that's hopping in and says, wow, this is a great deal. Finally, I'm able to get my hands on an opportunity on a deal. And that's because one of the other investors is passing on it and they're looking at this opportunity. And on a lot of times people have been overpaying for projects, ones that don't know the areas really well for a while. And that's a scary thing. And, sometimes I'm the one who has to come in and be like, listen, the reason you need so much cash to close on this particular project is because you're just overpaying for it. You're paying $175,000 for a property that you should have been paying $150,000 for. And keep in mind, wholesalers, sellers of investment properties, banks for that matter, listen, they're going to sell a property for as much as they can get for it, right? So it's not up to them to do due diligence for you as the buyer. It's up to you to determine if you're paying a good price for it. So I see tons and tons and tons and tons of deal flow, but I'll tell you that a lot of the stuff that's coming through our desk, I think people are just overpaying for because they're desperate to get a deal. And they want to kind of jump in and they want to find an opportunity. Now that's not the case for everybody, but I will say that I have seen that more now kind of than I have for the past. And I think a lot of investors justify this to themselves because they know it's somewhat of a seller's market right now and everything's flying off the shelves. Everything that's listed that's halfway decent is selling for at least ask, if not over ask. You can ask any real estate agent. They'll state the same thing as long as it's a halfway decent asset. And I think that some investors have in their head of, hey, if I buy this for this, it's going to sell it. Normally it would sell for this, but I think I could push it to this higher and higher and higher. And that's kind of a scary thought.
Well, as you guys can tell, Jason is a lender by trade, and you can see how conservative he is in his nature. I don't disagree with some of his points, but what I would like to say, as an operator type, is that I do think deals exist out there, and I think there's a chance for people to go out and buy stuff. I think where the confusion lies, and I think this is what maybe is coming, the underlying tone with Jason is that things are flying off the shelf. So when you look at it, you're like, yeah, that's a deal that I wouldn't do, but people are buying because people are like, oh, the interest rates are only 3%, so they can afford more, which is causing people to pay more. And everyone's saying there's this fury, but at some point this fury is going to stop. We don't really do fix and flip anymore. I know I've spoken to a few people that I know that do it. I just recently had a conversation with Steve Kavanaugh, who we had on here. He said he can't keep any inventory in stock. It's flying off the shelf. I think what it comes back to, and something that Jason hit on, is that make sure you understand your numbers. Make sure you understand the deal. Make sure you understand what it's going to take to get this deal across the finish line. What are you going to do if interest rates skyrocket overnight, right? Like, there's a lot of things that you need to be cautious of. I do think now's a good time to make money in fix and flip. It's not a preferred business model for myself, but I do think there's money to be had out there. However, the risks that you're willing to take, the length of the project, I think anybody that can compress the timeline of their project is going to win. Anybody that can keep their cost to a minimum, obviously, always is going to win. Anybody that's putting out a product that's going to sell faster than everybody else. I was talking to RJ the other day. He was telling us that they're getting multiple offers in like 72 hours. I witnessed Dan's sister. She was up at our Creek house. She's a realtor up in Philadelphia. They had so many offers. They finally said, that's it. This is the deadline. You're in or you're out, Yeah. So it is an interesting time. I know a lot of people, economists alike, are having issues understanding how the market is continuing to do so well when we have so much quote unquote crazy stuff going on, so you do need to be cautionary of the fluff out in the market. And in the end, I think we're both saying the same thing. Understand your numbers, understand how you're going to get the deal done, and keep it moving, Yeah,
and I think it actually, and I do agree. I think it is a good time to buy fix and flips, ones that are, number one, at your current experience level, right? If this is your first fix and flip, I wouldn't be doing a gigantic construction project. I'd be in an area that you can get an easy renovation done and get it done quickly and on the market. But I do believe that there's good opportunities there. I see them, but I don't believe that they're falling in people's laps. I don't believe that someone can go on MLS and find a property and say, hey, this has been on the market for 30 days. It seems like a good price. I should buy it. A lot of people are not doing proper due diligence, and that's always the case. I mean, there's market cycles that deals will fall on your lap. You can jump on MLS, you put out a bandit sign, and someone's going to call you, and they're going to sell it for a fair, reasonable win-win deal. I don't see that happening that much right now, but I still have seen a heck of a lot of good deals, and some of them are on MLS, and some of them are off MLS. But again, it's just like deal flow with anything. If you have 10 leads this week and you have to choose one of them, right, you're going to choose the best deal that you have.
Yep.
So, if you have 10 sellers or 10 off-market deals or 10 MLS deals, and you have to pick one, like the numbers aren't great. People forget they got to put in the hard work. Imagine if you had 50 leads this week and you could pick one. I'm guessing that one deal is going.
Jason, am I here by myself? What did he do? I don't know. Are we still live? We're still live. Jason was going. I don't know what the heck he did to me. He left me hanging here.
I'm right here.
But something that is interesting that I'm sorry, I'm watching myself in real time behind here. But something that a lot of people need to be cautious of that's about to change right now is the fact that there is not another source of inventory besides what we're putting in the market. Banks are about to start being able to do foreclosures again. They have backed up inventory. Are they going to flood the market? Is it going to drop prices? Is there an inventory crunch? A lot of things are about to potentially change because the economy is quote unquote opening back up. These are all things that you need to watch, and things that you can't predict. That 3 months ago you're like, oh, this is the best time ever. Just like prior to COVID, everyone's like, there's no way anything will crash this economy. Nothing will ever stop. Boom, COVID happens. Everyone's in a panic. After as COVID's going on, everyone's like, no, it's going to go back. It's going to go back. And now, boom, here we are again. Where does it go? So
I agree, and I'm gonna throw Jason Miles' comment on here because I'm somewhat in agreement with this. For the most part, he writes, I'm staying away from buying rentals now because there's such an uncertainty of refinancing. If there's a shutdown again, great time to jump into flipping. I agree with that too. Lots of uncertainty related to that. And, to be honest, a lot of the loans, and we'll talk about kind of what we're seeing for the buy and fix and rent as well. We can segue to that right now. And I agree, because I would say there's more loans we're probably doing now that the intent is not necessarily to fix, but the intent is to rent. I would say maybe 70% are to rent and 30%, or I'm sorry, 70% are fix and flips and 30% are fix and rents. And there is some uncertainty in there, especially if, I believe banks will always be, I believe will typically, there's always going to be capital for this particular type of venture in real estate investing. But again, it might not be what you're used to, and it might be higher qualifications than you're used to. At the right credit score, at a low enough LTV, and at a favorable enough debt service coverage, banks will be in this space. They'll jump in this space. Now, obviously, times were very, very aggressive over up to a few months ago, and there was a lot of liquidity, and everybody was able to get refinancing on these things. But that's already tightened up. We all know that, and it's going to continue to get tighten up. Now, I will tell you that, and I'm very vocal about institutional-backed private loans compared to banks, hard money lenders. I believe that it's tough to have those lenders in the fix and flip space. I don't know how they can even be in the fix and flip space. I don't think they make enough money, and I don't believe that they can underwrite on a national level for a construction project. There's just too many variables to not be a localized company. Now, that being said, I do believe that institutional lenders, backed lenders, hard money lenders, whatever you call them, private lenders, whatever it is, I do believe they should be in the long-term rental loans. I do. I think there's money to be there. I think it's easier to underwrite. I always have believed that there should always be plenty of capital available on a rental property. And that doesn't necessarily mean 100% LTV of a rental property. What I mean by that is, get yourself a good equity position, maybe a 70%, right? So the value is $100,000. Let's say it rents out for $1,000 a month, and institutional backed, so, something Wall Street backed or something cheap capital backed gives you a 70% LTV deal. And if you buy it at a good price, and it's rented out, then you need less cash into the deal. If you buy it at retail, you have to put more cash into the deal. And, the numbers still potentially work. I've always believed that there should be a good product for that, and I know that product kind of disappeared. Although obviously there's signs and people stating that those products are back now. So hopefully, income producing rental properties will continue to stay, because I'll tell you, there's a lot of deals that don't work for fix and flips, but they do still work for rentals. They're still decent. What looks to be on the surface decent rental properties out there. And I mean, I know, Ian, you kind of switched your focus to some larger projects, and you already have a good bucket of single family rentals, but I'm guessing that you probably still see maybe not home run opportunities, but opportunities that still would fit your investing model.
Yeah, I think there's deals out there. Prior to this, we had slowed down. Probably, I would say almost 8 months prior to this, we were slowing down just because deals were compressing so much. Debt wasn't that good. I'd like to comment towards Jason is that there is debt options out there. We're actually in the process of refinancing our entire portfolio with a local bank, and they're more than happy to do it. And it's a new relationship. So with that being said, the deals are out there. The banks are out there. And I do think you can find deals that fit in your wheelhouse. Again, it comes back to knowing your timeline, knowing your project, knowing what you want to get done, and knowing how you're going to refinance it over and over and over again. And I think now more than ever, and I think we discussed this and we've hammered this point home over and over and over again, there is no better time than now to completely understand your business model. Whether it's been that you've taken it and broken it all apart and rebuild it during this time, or you've explored what works and what doesn't. There's been plenty of downtime, and I'd like to say that this market's coming roaring back in the way that there's going to be a massive rollout of properties and inventory. There's going to be a massive rollout of tenants. There's going to be a massive rollout of evictions. There's a lot that's about to happen in a very short period of time that's going to flood the market. The question is, how are you going to handle it? To what you're saying in regards to looking at bigger projects, it's worked in our advantage to what we have. And we knew that sure, we cut our teeth on small projects, but after a while you see the economies of scale and say, okay, well, we can do this really well. Why not dedicate our services or dedicate what we're good at to a larger project and really hit a home run? But it's all relative. It all goes back to understanding I think in the core of it, everything we're talking about today, it all goes back to understanding your business model. And if you don't understand your business model, what you're good at, what you're not good at, none of this exists. You don't exist as a lender. I don't exist as a rental operator. We don't even sit here today and talk to anybody about what our beliefs are,
Sure. Yeah. So if anyone wants to comment related to how they're personally seeing deal flow, if they're a real estate agent, or if they're a real estate investor, buy and hold investor, fix and flipper, another lender, whatever it is, curious your thoughts, even if you're not in the local market. I'm curious your thoughts on the market. Is it good? Is it bad? Is it the same? Has it been the same? I mean, we have a good. Go ahead.
I was going to say, and the reason we've landed on some larger projects is, I think recently there's been a time that I think a lot of people were holding on and saying, "Oh, another year, another year, another year." I think COVID struck a nerve. Everything that's going on in the world has struck a nerve with some people, just to say, "I want to change. I want to sell. I want to do this. I want to do that. Life's too short." Whatever it may be, there has been some interesting inventory coming across the desk. And a lot of the reasons are the same. People want to retire, or people are going through this, or they're going through that. I think COVID helped exploit some of those things for some people and has really sped up the process. And I think there's going to be more and more good inventory coming about.
Yeah. I mean, what you said earlier is, who's going to be prepared and where's it going to come? Prepared in both ways. That is somewhat of a scary thing. And as inventory comes up, and you're talking about inventory for real estate investors to buy and fix and buy and rent, right? Okay, not to selling inventory quickly like the current weird seller's market we're in now. I mean, I don't know what will happen. I mean, obviously, for that to happen, there has to be some sort of softening in the market and enough pain in the market, which doesn't now before that currently happens. So, not that I know what's going to happen. The second you think you know what's going to happen is the time that you're going to get kicked in the ass. It's that simple. As soon as you think you have something figured out, you're going to trip and fall and get hurt. So, every day is kind of a learning experience, and every day, we're kind of taking it, and everybody should be, and be like, okay, well, where are we at now on stuff? Maybe I bought a property for $100,000 today. Maybe tomorrow I'll pay 110. Maybe the next day I'll pay 90. Right? You have to adjust, and you got to be in the trenches every day to kind of understand and to try to figure out kind of the best options. But if I had to guess, going back to that, if I had to guess, I would say that this seller's market where we're at is going to stay where it's at, probably through the summer, probably through the early fall. And then I'm a little nervous that this whole thing is just going to implode overnight. Everything, the floors is going to drop from under us. And if that happens, that is a scary thing. When COVID hit, it actually didn't really like overnight, at least in the real estate, it affected a lot of people in a lot of industries, but at least in like the real estate industry, yeah, it was hard to go buy projects over here. But guess what? Over here, we were able to sell projects for more, right? And over here, yeah, the projects were harder to find, but the interest rates were lower. So the interest rates being low has helped so much. Now, keep in mind, the very interesting thing with all of this, and when we do we do a Monday morning huddle up for our entire team and our entire office over Zoom. And one of the interesting things that came up is someone in my office was like, they still have all these job reports that are coming out on a regular basis, and the unemployment is getting higher and higher and higher and higher, right? It's getting higher. Benefits eventually are going to start going away. Government money is eventually going to go away. So what's going to happen with that? And it's true. So it's like, hey, real estate's good. Interest rates are low. Things are selling. Not business as usual, but like the market's good. But then at the same time, you have unemployment over here that's at an all-time high, and it just keeps increasing. And there's an argument related to, depending on what type of asset classes you invest in, who's more affected and who's not affected, related to that. But at the same time, like interest rates, all of a sudden, if those just go up a tick and another tick and another tick and another tick, the next thing you know, they're back to 4% and then up to 5% or whatever the case is. Like, guess what? All of a sudden, the market softened, and prices go from $200,000 down to $190,000 for the same house, or $180,000 for the same house. So that happens quickly. That happens a lot quickly. And again, typically what happens is, hey, things are going good. And like, you can absorb that. And again, if they went down like this, let me get right here. If they went down like this, that's okay too. But if it goes like this and then down like this, then back up and then down like this, if you're in that wrong part of that cycle, you are screwed unless you are prepared. So I would guess that things will continue to stay solid until early fall. And then somewhere around kind of election time, I'm guessing that interest rates will probably increase. Consumer confidence will get more not confident. And I don't know. We're going to see what happens. We got some questions here too, but go ahead, Ian.
Yeah, no, I would say that's how a lot of people from 2012 to 2016 probably stayed afloat, because the market continually went up, and then there was some softening, there was some interest rate issues, there was some confusion that slowed a lot of people down. I'd love to answer Joe's question if you want to pop it up.
Yeah, you do Joe, I'll do Jones.
So Joe's question is, can you guys talk about some of the deals you've done lately, buy and flip as well as buy and hold, and what type of financing, et cetera? So currently I haven't done anything on a single family level. We did recently, right when COVID started, we finished up a warehouse that we wound up selling that was successful, even though all that was going on, and we were able to close it. We also bought a 76-unit apartment building during all this, and that was actually set up with owner financing. And we're involved in another storage deal, again, with owner financing. So everything we've seen recently is now is a good time to leverage financing from sellers, either holdbacks of a first or a second, because, it's very easy to explain the uncertainty of the market. Where's it going? What's going to happen? Banks are tough to get money from right now. I think there's a huge opportunity for that. Joe also We're in the process of refinancing our portfolio. There are banks out there lending. People ask me all the time, how do you know all the banks? I literally, like, once a quarter, pick up the phone, pound the phone with all the banks and kind of just shop them and say, hey man, like, what's going on? We're interested. I don't know we're in the market today, but what do you guys got going on? Just to know what's going on. I think if you pound the phone, depending what market you're in, I'm sorry, I'm not sure where you're from, just pound the phone, you will find a bank to finance you. Furthermore, if you're doing direct marketing, I believe there's owner financing deals out there. And I believe you can get them done relatively easy right now with everything going on.
Yeah, I mean, there's always capital. There's always capital in this space. It's not going to be given out. Capital was given out. It was very cheap and it was very high leverage until COVID over the last few years. That's probably gone. So I wouldn't go into a deal expecting 100% financing. You're probably going to need 20, 30% towards the purchase price or something like that. So, again, get your resources together, figure out if you need to partner with somebody else, figure out if you can do it yourself. In the past, you might have been able to do 2 or 3 projects at the time. Now you might only do one project at the time based on financing. The capital markets make it sometimes dictate, how much your ability of how many projects you can do and how it's set up. But listen, I'm a big advocate of putting skin into deals, not just because I'm a lender and wear an underwriter hat. I think it's important. If you were doing a 90% purchase and 100% construction loan with one of those institutional backed lenders, and the deal starts going sideways and the market starts going sideways, you're in a tough predicament. You're in a tough spot. It's going to be hard to get out of that. If you have 25, 30% into that deal, all of a sudden, you have more wiggle room and more equity for worst case scenario. You got to manage risk. This whole game is about managing risk. I'm not saying don't go all in and try to, make this thing, make it work on it, but like, you got to be careful. So, but banks are lending. Hard money lenders are lending. Private investors are lending. 401k and self-directed IRA lenders. There's capital out there. All right. So let me jump into John's. So John, good question. As a newbie, in your opinion, should I start with a small fix and flip or buy and hold? So I would say either, but let me state what it'll depend on your situation. So I'm always big about small fix and flips in general. When we look at a deal, let's say we have a potential deal, we look at what's going to happen if we wholesale it. What's going to happen if we take it down and immediately put it on MLS? What's going to happen if we put some lipstick on a pig in it, real quick renovation, and what are we going to do if we fully renovate it, right? Because let's be honest, a big thing that a lot of people don't realize is, let's say you can wholesale a project right now for $20,000 and take on no risk, or you have to do a full Mac Daddy renovation and make $40,000 in 6 months or 9 months from now. So many people want to make the extra money, but then they take on so much more risk and so much more time. It doesn't work. Most of the deals that we've done, and obviously we're a lender, that's the majority of our business model, but every once in a while we get deals that kind of, fall in our lap from contacts that don't have the resources to do the deal or just want to pass it on. We look at it in a few different aspects, and most of the time we're either doing a wholesale or we're buying it, getting a contractor in there to do like less than $5,000 worth of work and putting it right back on MLS, at least to try it, just to see if we can kind of get some offers in. And then if we can't, then we move it and do a full renovation on it. But I'd rather make half as much money now and then move on to the next deal. The whole game is just moving on to the next deal and moving on to the next deal. So, and I'll tell you, deals that default in our portfolio, so in general, are the ones with the bigger construction projects. There's, if you're a newer investor, you want to stick to some sort of smaller construction project. And I'm not saying that you can't handle a larger construction project, but there's more risk. There's more time. There's more risk. Try to stay on a small one if you can. I think buy and hold is fine. That being said, if you want to be a buy and hold investor, you got to have good credit so you can get a bank refinance at the end of the game. You got to have cash reserves. And I would potentially say you might even want more kind of liquidity for a buy and hold than anything else. I mean, every deal that anybody does, especially at the beginning, on paper, it's going to be smooth sailing. It's going to look good, right? But then as soon as you buy that deal and you take it down, there's going to be some small speed bumps and some big speed bumps, and there's going to be everything kind of coming in that road to knock you down. So Just remember that. If I had any piece of advice for anything for a new investor, I'd say do one project. Do one project at a time. See it completely through. As soon as that thing's done, then you move on to the next one.
John, I have a point, and a lot of people are going to be very surprised by this comment coming out of my mouth, out of everybody on this show and everybody that knows me. But as a new investor right now with the current market conditions, your number one goal is to hit a single. That's all that matters right now is hit a single. Get out of the batter's box. Don't strike out. Don't walk. Just hit a single. Don't worry about hitting a home run. Get your deal done. Make sure it goes smoothly, and then you'll start to begin to understand what your next step in the process is. It's very important that you do that first deal right because it's going to set you up for your next ones. It's very hard to hit a home run, whether you've been in this business for 10, 15, 20 years, or you're a brand new investor. It all looks good on TV, but take your time, make sure you know what you're doing right. And to comment back with what we were talking with Joe and Jason was referring to is having equity in the deal. That's going to allow you to have more, number one, more drive to make sure the deal is successful because you have more money at risk. Number two, the other thing that's going to do for you, a lot of people look at stocks and they're like, oh, whatever, I'm taking a loss, and they just sell them off and they don't really think about it because it's $100 or it's $200 or it's a few grand. When you have that money committed as equity, it gives you that room to number one, sell it off if you're jammed up. Number two, you know where you're standing and how much money you have committed. You're putting $25,000 out on a deal. That's some big money to be putting at risk and losing. So having that capital committed to the deal makes it that much more. It gives you that much more ownership in the deal above and beyond what you already have, and I think it will help you succeed even further. And Joe, I see Jason's got that one up. Yeah, that deal was a home run. It was teed up when we got there. All we had to do was come in and literally we were basically a pinch runner. Like it was that easy. We didn't really have to do anything. So we'll do a case study on that here.
Yes, you did. I mean, you worked hard on that deal. Like you do on every deal. Like you got it.
The thing is, the guy teed up the first part of the deal. You know what I mean? Like he teed up. The seller was ready to go.
I understand, but you still had the credibility of being involved and doing stuff and understanding the business model. I mean, that's like saying like, hey, some of the biggest real estate investors locally, use me to do doing lending, and it's like, yeah, but I put in the hard work for a long period of time in order to build credibility to do deals with them.
Leave me alone. I'm trying to be humble, but either way, we'll do a case study on that.
That is humble. That is being humble.
We'll do a case study on that one sometime in the future once we get that ball rolling a little bit deeper and have proof of concept. So we'll keep you posted on that one. But I think in the grand scheme of things, man, there's deals out there. You just got to know what you want, where you want to be, and what's your direction, what's your future. If you can define all those things, I think right now it's a good time to be hitting singles. There's deals out there. Disregard everything else that's going on in the world. Put your head down and concentrate on you. It's funny. I've been reading that book, A Happy Pocket Full of Money, or whatever, the one that Dan Schwartz recommended. And it talks a lot about. And Jason, I think I've had this discussion with you. Is like we go to Russell Brunson's conference every year, and you're like, oh, look at this guy, $100 million company in like 4 years. You're like, dude, some people are just chosen. But really, it comes down to is if you hyper concentrate on what your goal is, I believe you can achieve it very easily. So, John, if you want to get out there and do your first fix and flip, hyper concentrate on it and get it done, and you will succeed.
Wait. You're talking about, Russell did a podcast on that exact concept today. Is that why you just thought of that?
No, I was reading it in that book. That's what it talks about. It talks about manifesting and hyper concentrating on what you want to get done. And if you have an I am statement, you will achieve to that I am level. Is that what he was talking about today?
No, not that. Well, no. This is
what being chosen.
No. His headline was, "Here's the secret to getting noticed," and then it was, I'll just skim this. He said, "People hear about ClickFunnels and they immediately identify me for creating this company that makes over $100 million a year when we were only in business for 6 years. But what it doesn't mention is that I've been in the internet marketing business for over 18 years. so-and-so grinding my little tail off and butt and losing every day and just losing. Some wins, some loses. So yeah, you know what's interesting?
He kept his head down and he knew what his goal was and what he wanted.
I know.
He kept
and he kept fighting. I mean, that's what it was. I mean, when I've been rereading some of these Robert Kiyosaki personal finance books, it was the same thing. It was like, that's, the difference, one of the reasons why, and he wasn't bad mouthing straight A students, but it was very interesting what he said, because he compared straight A students to entrepreneurs and business owners that were successful that just weren't good students. And he said it just had, and his thought process was the difference between some failing, who knows how to deal with failure and who's failed the most compared to who's succeeded the most. And he was like, a lot of the students who were good at school and had good grades, and obviously, like, he didn't credit how hard they worked. That was important. But the difference is they weren't used to failing and they didn't want to fail, right? So they continued to work hard so they didn't fail. And on some of these other students, they would just fail over and over and over and over and over. And, in business owners, you don't typically learn from success. You learn more from failures. And, you put yourself in the situation of like, I never want to have this conversation with this seller again. That was so uncomfortable. Or I never want to have to foreclose on a property again. Or I never want to, I don't know, do whatever. I'm never going to make this mistake hiring this contractor that was unlicensed again. And it's just failing. And then, it's hard to teach that on paper, right? You gotta be the ones that do that. I mean, you've learned a lot over the years related to, when you buy in your portfolio and what tenants, I'm sure there's tenants that'd be like, listen, like, I can't put this tenant in there. It'll be deja vu. It'll be the same thing. I mean, you might bust my balls for why we're conservative about lending, but it's like, I've done 3,000 loans. I've had lots that have gone good. I've got deals that have gone bad over the years. And I learned from them, right? I learned from those mistakes, and I want to make sure I never make those mistakes again, because it's not worth it. And let me tell you, one of the worst things you could possibly do as a real estate investor is if you're out there raising capital and you potentially lose somebody's capital. Like, that's not a good feeling that you want to be in. So you have to, you have to do whatever you can to make. It's not just about doing a deal, right? Like, there's a lot of people on the line. There's a seller on the line, and if you tell them you're going to buy a property at a certain date, they're reliant on you to buy that property at a certain date. You have contractors that have to be taken care of. There's so many people in the mix, right? Like, there's a dozen people in the mix on every single real estate deal. So, like, I'm not saying that people should shy away from doing deals. They absolutely should, and they should dig in. But like, there's a lot of people, there's a lot of families involved in these projects. So you got to make sure you do whatever you can to make sure everyone's taken care of.
Yeah, man. Well, I hope it was helpful for everybody. And if you want to talk further, Ian at Equity Warehouse, I'm around. I will gladly entertain anybody that wants to reach out.
Dude, now that we can, edit these things, we can just put our email addresses right by our names.
Oh, shit. Well, I didn't know that. I'm not in control. I'm just here to.
Wait,
here. I'm the entertainer.
Wait, right. Where is our names on here? I don't even see them anymore.
No, you still got, there you go. Oh, yeah, see, there you go.
God dang.
Hell up there. So.
There we go. Equity Warehouse.
Well, for those that are listening at home, you can reach out, Ian at equitywarehouse.com. I can't guarantee I'll reach back immediately, but you can always reach out. Happy to talk about current deal flow and what the current marketplace looks like.
Absolutely. All right, guys. Hope you enjoyed the show, and we will touch base with you soon. If you need anything, feel free to reach out, and happy to help.
Thanks for tuning in to the Real Estate Reserve Podcast. Do us a favor and like, comment, and share our broadcast. It helps the algorithm and helps us spread the word too. Till next time,